Welcome back to Investing Talk Podcast. Today, we're going to be looking into the world of crypto investments, specifically a company that's really been making some waves. You, our listener, sent over a whole bunch of recent financial analyses, market reports, crypto news, all asking that really key question. Is now a good time to buy Bitmine Immersion technologies? So we've gone through all that material you sent, and we're aiming to give you the clearest, most actionable insights we can, really tailored for you. Now, before we really get into Bitmine itself, if you find these discussions valuable, please take a quick second to subscribe, like, and maybe leave a comment. Your engagement genuinely helps us bring you more of this kind of content. And hey, if you're feeling particularly generous, maybe consider buying us a coffee. The link's usually below. Also, really important, if there's a specific company you want us to look into next time, just drop it in the comments after today's discussion. We genuinely love getting your suggestions. Okay then, let's turn our attention to Bitmine Immersion Technologies. It's definitely a name that's been buzzing around, especially if you're interested in the crypto space. And, well, for good reason.
Yeah, what's immediately striking, looking at the sources you provided, is that Bitmine isn't, just another tech company. It's primarily focused on Ethereum. It's an Ethereum crypto holding company. They've actually, quite strategically, positioned themselves to hold the #1 Ethereum treasury in the whole sector.
Huh.
That was as of April 2025. And that's not just a small detail, right? It tells you a lot about their core strategy, where they see the future. Their classification is finance services, but really specifically focused on crypto assets.
#1 Ethereum treasury holder. That is a powerful statement. Speaks volumes about their belief in ETH. But, every investment has its twists and turns. And looking at recent market moves, things have been pretty interesting for Bitmine. Just this last Wednesday, August 27th, the stock actually closed down almost 8%.
Yeah.
It finished at $46.03. And the trading volume, whoa, it surged to, 63.8 million shares. That's way above its 3-month average, which is more like 34.4 million. We even saw it trading in a pretty wide range that day, like between $44.52 and $49.09. That's some serious movement in one day.
It really is. That kind of activity definitely gets your attention. And this drop, it came right after that mid-August announcement where Bitmine raised a huge amount, $20 billion, in equity financing. And they didn't just sit on it. They deployed that capital this very week, buying nearly 200,000 more Ethereum. Now, putting money into ETH might sound bullish on the surface.
Yeah, you'd think so.
But an equity offering that big, $20 billion, that almost always brings up concerns about dilution for existing shareholders. You issue that many new shares, it spreads the ownership, future earnings. It can potentially hurt the value of the shares people already hold. So that concern very likely played a big part in the stock pullback we saw.
Right. So it's like one step forward with the ETH holdings, but maybe one step back with the dilution impact, at least in the short term. A classic balancing act.
Exactly. It's precisely that. But it's not all negative sentiment floating around. The sources also highlighted the appointment back on June 30th of Tom Lee as chairman. And anyone following crypto knows Tom Lee. He's a pretty well-known crypto bull. His name being attached lends, significant credibility to Bitmine's longer-term strategy. It suggests there's a solid vision there beyond just these day-to-day market swings.
Okay, so despite that recent dip, the dilution worries. Let's maybe dig a bit deeper into Bitmine's overall financial health. Because the numbers, when you look closer, are actually pretty substantial. They offer a different angle.
Oh, they absolutely are. As of July 29th, 2025, Bitmine reported having a massive $2.77 billion in liquid assets. And this isn't just like an accounting trick. It includes their crypto holdings and their unencumbered cash. That's a huge amount of liquidity, real financial flexibility. On top of that, they announced a $1 billion stock repurchase program.
$1 billion, wow.
Yeah. And that's a very direct, very tangible vote of confidence from the management team. When a company buys back its own stock, it's basically telling the market, hey, we think our shares are undervalued right now.
Mm-hmm.
Plus, it reduces the total number of shares out there, which can help support the price and potentially boost earnings per share down the line.
So it really is management putting their money where their mouth is, isn't it? Saying, we believe in this, we're investing in ourselves. But this raises a really crucial point that came up in the sources you sent over. The lack of disclosed, consistent revenue or profit data for Bitmine. For a lot of traditional investors, that's like fundamental. PE ratios, revenue growth. How do you even start to assess a company like this without those standard metrics, especially compared to, I don't know, a manufacturing company or a software business?
That's an excellent question. And it really gets to the heart of investing in this whole emerging sector. You're absolutely right. Traditional valuation models relying heavily on predictable revenue, profit margins, PE ratios, they just don't fit neatly here. Bitmine, fundamentally, it's a holding company. Its value comes mainly from its underlying assets, which is mostly Ethereum. So valuing Bitmine really means valuing Ethereum itself and then factoring in how efficiently Bitmine manages those holdings.
Okay, so it's a different way of looking at value.
Totally.
Oh,
Our analysis has to shift. It's less about the income statement and more about deep diving into asset valuations, the market sentiment for that asset, and the company's skill in managing liquidity and growing strategically within crypto. It needs a different lens, one that focuses on balance sheet strength, asset quality, strategic position, rather than just quarterly earnings reports like we're used to.
that really reframes the whole conversation, doesn't it? So connecting this back to Ethereum, Bitmine's recent moves, like you said, buying nearly 200,000 ETH. They added, what, $252 million worth, pushing their total stack to almost 800,000 ETH, 797,704 ETH, valued around $3.7 billion. That directly ties their financial health and our investment thinking straight to how Ethereum performs. Which naturally leads us to the bigger picture, the Ethereum market itself. If Bitmine is basically a leveraged bet on Ethereum, what's the outlook for ETH based on the materials you looked at? Is it a rising tide situation or is it more complicated?
Well, the real story here and what your sources are almost shouting is that we could be right on the verge of a pretty significant breakout for Ethereum. The data shows this powerful convergence of whale activity, the big influential investors, and also surging institutional demand. It's a combination we haven't really seen with this kind of intensity since that huge 2021 bull run.
Yeah, it's 2021.
Yeah. And this alignment is signaling a potential run towards $5,000 for ETH, maybe in the near future. The implication for Bitmine is, well, it's direct. Its success is fundamentally linked to Ethereum's success. Their big ETH holding is central to any investment case.
Whale activity. It always sounds so dramatic. Can you give us some real examples of these huge moves you're seeing? Who are these players? What are they actually doing?
Sure, happy to. And yeah, they are pretty dramatic. We're talking about really large strategic shifts. For instance, one source pointed out a wallet that had been completely dormant, no activity at all since 2021.
Okay.
It suddenly came alive recently and moved 6,334 ETH, worth about $28 million off the Kraken exchange. And the interesting part, it happened during a 13% price dip for ETH. So this isn't seen as panic selling. It looks like aggressive accumulation, someone confidently buying the dip.
Buying low.
Exactly. And even more striking, there's an $11 billion Bitcoin whale.
$11 billion.
Yeah, huge. They liquidated $2.59 billion worth of their Bitcoin. And then they converted those proceeds into a massive 472,920 ETH. That's about $2.2 billion worth. Now, that isn't just a trade. That's a major strategic pivot, a huge shift of capital from Bitcoin to Ethereum. Lots of people see that as a profoundly bullish sign for ETH. And this isn't isolated. We've apparently seen 48 new whale addresses pop up in August 2025 alone. It's like watching the smart money, the really big money, place major bets on Ethereum's future.
Wow, that is quite a reshuffle. These aren't just small-time investors. These are serious market movers making big bets. What about the other side, the institutions? Are the big traditional finance players also getting involved in Ethereum now?
Oh, absolutely. Institutional demand is definitely the other key part of this bullish picture. We've seen ETF inflows surge past the $1 billion mark just since August 21st. Beyond just ETFs, corporate treasuries and other institutional funds have apparently absorbed nearly 5%, 4.9% to be exact, of the entire circulating supply of ETH just since June 2025.
Almost 5%. That's huge.
It is. This isn't just speculative froth. It's significant structured capital flowing in. Plus, you've got that attractive 3% staking yield on Ethereum. In a world where yield is hard to find, that's acting like a magnet for institutional capital seeking returns. These feel like longer-term positions, not just quick trades.
Okay, so we've got whales making strategic moves, institutions putting serious capital to work in ETH. Are there other factors, maybe technical things or regulatory stuff, supporting this really positive outlook for Ethereum?
Yes, definitely. There are several other tailwinds working in its favor. On the technical side, the price charts are showing what analysts call a V-shaped recovery pattern that usually indicates a strong rebound after a dip. We're also seeing that almost 80%, 79.96% technically of all ETH is currently held in profit. That typically signals a healthy market, less pressure to sell. And then there's the futures market, a hefty $60 billion in open interest, showing really robust activity in derivatives. Beyond the charts, the fundamental mechanics of Ethereum itself are really important here. Remember EIP 1559?
Vaguely the burning mechanism.
Exactly. That upgrade introduced deflationary mechanics. So basically, with every transaction on Ethereum, a portion of the fee, the base fee, gets permanently destroyed or burned. Think of it like the total supply is constantly shrinking, bit by bit. This burning tightens the supply over time. Meanwhile, if network usage grows, demand increases. Tightening supply plus increasing demand, that creates a powerful scarcity effect.
That's a really critical point, built-in scarcity. That makes sense. And what about regulations? That always seems to be the elephant in the room for crypto.
It is, but here, according to the sources, we actually have some positive movement. Things like the U.S. Clarity Act and the EU's MACA framework, these aren't just random bills. They represent serious efforts to legitimize Ethereum's role in the global financial system. The Clarity Act aims to bring regulatory clarity for digital assets in the U.S. MICA markets and crypto assets is a big regulatory package for the whole EU. Frameworks like these reduce uncertainty. They make it safer for big corporations, for financial institutions to get involved. It's kind of like a stamp of approval, which is crucial for long-term growth and adoption. And finally, Ethereum just continues to show its dominance as a platform. It's capturing something like 40% of all blockchain fees across the board. That shows massive network usage, real demand. And if you look at its ecosystem, there's a mind-boggling $200 billion in total value locked TVL, just in liquid staking and Layer 2 solutions as of Q3 2025.
200 billion.
Yeah. Liquid staking lets people earn rewards but still have access to their capital. Layer 2s make transactions faster and cheaper. Both are vital for Ethereum to scale up.
Yeah.
You put all these technical, mechanical, regulatory, and ecosystem factors together. And that's why analysts are projecting those price targets for ETH, somewhere in the range of $4,600 to $5,200.
Okay, so after this really comprehensive look at Bitmine's structure, its financials, and this incredibly bullish outlook for Ethereum, the asset it's so heavily tied to, we have to circle back to that initial question for you, our listener. Is Bitmine Immersion Technologies actually a good buy now? We've heard really compelling points about Ethereum's potential, but also those red flags, the recent dilution, the volatility, the unique valuation challenges for Bitmine itself.
It really does boil down to that question of balancing, potentially significant opportunity with some very real inherent risks, especially in a frontier market like crypto. According to one of the analyses you shared, the overall rating given to Bitmine was actually just a 5 out of 10, kind of middle of the road.
Only 510 YO.
Well, the reasoning highlighted its exceptional liquidity, that nearly $2.8 billion we talked about, and that aggressive $1 billion share buyback program. Those are seen as definite strong points. Financial strength, management confidence.
At the risks must be weighing it down then.
Exactly. The report was critical about the lack of disclosed consistent revenue or profit data, and the absence of those conventional valuation ratios that traditional investors depend on. And that's not a small thing. It means judging Bitmine's long-term value is just inherently different, maybe more speculative. There's a very heavy reliance on crypto prices, specifically Ethereum's price, and also the regulatory environment, which, as we know, can change pretty quickly. We're talking significant sector volatility and just a fundamental uncertainty about where future revenue and profit might come from beyond just holding crypto and hoping it goes up. These are absolutely crucial risk factors you just can't ignore. So the analysis basically suggests that while that buyback does offer real support and shows management's belief, Bitmine might actually be, perhaps counterintuitively, better suited for short-term trading right now, especially given this potential Ethereum catalyst on the horizon. It's not really supported yet by transparent fundamentals or reliable long-term projections that a typical buy-and-hold investor, someone looking for traditional income-generating assets, would usually look for.
It's definitely an opportunity, no doubt, but it's one with a very specific risk profile. It's heavily dependent on market sentiment and the wider crypto cycle.
What a fascinating discussion. We've really peeled back the layers on Bitmine Immersion Technologies. We've seen its strengths as substantial liquid assets, that big buyback plan, all deeply tied to what could be a very bullish phase for Ethereum. Yet we've also had to highlight those very real risks, the volatility, the regulatory question marks, and that current lack of traditional metrics, making it such a unique kind of investment proposition.
Indeed. And understanding these complex links, these inherent risks, it's just so crucial for making informed decisions in this space. It's evolving so fast. So for you, the listener, what really stands out most from all this, thinking about Bitmine's specific situation, its strong ETH position versus that lack of conventional financial data, how does that shape your view on investing in a company that's so fundamentally tied to the crypto market? It's a question that really pushes us to think about what value and opportunity even mean in this digital age, doesn't it?
Thank you so much for joining us on this exploration today. We really hope this analysis of the material you sent over helps give you a clearer understanding of Bitmine Immersion technologies and all the broader factors shaping its place in the market. Until next time on Investing Talk Podcast.